Hi, good morning to all. Welcome to today's Daily Dose of Market Insights brought to you by OANDA, presented by myself, Kelvin Wong, the Senior Market Analyst of OANDA Asia Pacific. So very good morning to all. Today is Tuesday, the 24th of October. So before we start our Daily Dose of Market Insights, let's take a look at the disclaimer slides first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, no financial advice or recommendation for any investment product. And any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, this will be the gist of the Daily Dose of Market Insights, will be a recap of key events in terms of highlights, market movements that took shape yesterday, and as well what are the events and economic data to look out for today trading session, and as well as tomorrow early morning Asia session. And to round up, we will have the key highlights for the Daily Dose of Market Insights will be the short-term technical outlook of the broad-based asset classes ranging all the way from the benchmark stock indices, the FX market, and as well as key commodities instrument. All right, so before we start over here, let me start off with what happened yesterday. Okay, so for those who actually joined my Daily Dose of Market Insights yesterday, we do highlight over here is that there could be a possibility of a counter trend rebound, short-term counter trend rebound in the benchmark US stock indices, which actually, yes, this benchmark, we call it the rebound that is seen in the US benchmark indices actually did occur. So what we could see over here is that it's actually led by this mega cap technology stocks. So what I could see over here is that the mega cap technology stock actually performed very well. Google, Meta, Amazon, Nvidia as well, up 0.384%, Microsoft 0.81%, with the exception of Apple, almost unchanged. So due to the fact that yesterday we do highlight certain key levels to watch out for the Nasdaq 100 and the Wall Street 30. So it's more like a I would say it's not a very smooth selling counter trend rebound because it actually chopped our short-term pivotal support level before it actually staged that rally. So, but what's interesting over here is during the intraday rally, the Nasdaq 100 rose as much as positive 1.6%, but where it ended at the close. So if it ended at the close over here, if you take a look at this bunch of, it ended positive 0.3%. That means more than half the gains was actually wiped out yesterday. And what's interesting over here, the rest of the benchmark indices closed in the red, okay, despite the leadership of the Nasdaq 100. So the S&P down negative 0.70%, the Dow Jones, which is one of the worst performer, negative 0.6%, and the worst performer is Russell 2000, negative 8.9%. So given the fact that over here is that we do not start to, at this point in time, the price action behavior and the intermarket relationship of the US benchmark indices doesn't warrant for the start of a more pronounced counter trend rebound nor a substantial recovery. So i.e. what we could see over here is that in the last 3 to 4 weeks, we are now still in a short-term downtrend phase of the US benchmark stock indices, which potentially could translate to broader based weakness in other major benchmark indices across the globe. Okay, so this is based on the price action behavior and intermarket correlation. And to explain what causes the movement of this yesterday counter trend rally in the benchmark US indices at the start of the session is due to the pullback in the US 10-year Treasury yield. Okay, so now let me hide myself so that we could focus more on the screen. Okay, good. Okay, so let us go down to see the US 10-year Treasury yield. So if I open up this chart here, so you all know that US 10-year Treasury yield has been pretty much sensitive with the benchmark US stock indices, even the global equity. That means a rise in the US 10-year Treasury yield, indicating to us longer term of funding cost increases, lower profit margin for equity. That's why it lead to what I call this 1.5 months of softness in global equities in general. So I could see over here is that the US 10-year Treasury yesterday breached slightly above the 5% mark before shipping that pullback. But overall here, the trend is still, the uptrend is still intact. So if you would look at the RSI over here, the RSI is also still holding above this support level. Recently just bounced off in the support, haven't hit the overbought region yet, so I can't say that it starts to form any bearish divergence at this point in time, because it hasn't hit the overbought region at all. So focusing on the price action, potentially we may start to see a bit of more pullback, but still holding the first support level will be the 20-day moving average at 4.7, followed by this last week low at 4.55, which is the 50-day moving average, so coming close to support level as well. So overall, right, the short-term and medium-term uptrend of the US 10-year Treasury yield still remains intact. That means, i.e., potentially, right, we could start to see another reassertion of what I call bearish pressure coming back into the global benchmark stock indices. If you look at this intermarket correlation, I highlight to you. So yesterday's, this is the key thing. So what you could see over here is that what's interesting over here is that yesterday we actually turned neutral almost all the FX pairs, the sterling dollar, the euro dollar, due to what I call mixed technical elements, which the play out indeed came out indeed through. Why? Because the dollar actually weakened across the board yesterday. So if you look at the 5-day rolling, that means 5-day rolling performance chart as of today, very clear signs that the dollar actually weakened across the board, across all the major currency, including the Chinese yuan and the Sing dollar as well. All right, so due to the fact that over here is that it could be also related to that 10-year Treasury yield, or also positioning as well, due to the fact that this coming week we have a key central bank meeting, which is the ECB, the European Central Bank meeting that is coming out on this Thursday. So we talk more about that in our daily market dose on Wednesday. Okay, so now what then commodity market is rather mixed as well. The gold actually traded sideways. The WTI crude oil prices went down about 1.5% before recovering close to the support level that we highlighted yesterday on the West Texas crude oil at around the 82.50 mark level. So now key economic data. So yesterday we do not have much key economic data in the major economy zone in terms of the European and the US economy. But what's interesting over here is that today's data is Japan. Okay, so Japan today actually releases their, okay, give me a minute, it's somewhere around here. Yes, so Japan releases their flash PMI data that including the manufacturing. So manufacturing almost the same at 48.5 versus the previous month of 48.5. So, but what's starkly what I call the services PMI, which is tend to be very strong in the start of this year, due to the fact that tourism is one of the factor that's driving the services industry in Japan, and also due to the fact of a weakened yen as well. But this services PMI actually dipped down below forecast of 52.9, and also below last month's September figure of 53.8. So it's still in expansion mode. Anything that's above 50 is expansion, but in terms of the growth of expansion has started to slow down on the services industry in Japan. So let's take a look at the services PMI data trend over here. Okay, so what we could see over here is that the trend actually went down. So this is so-called the lowest month of growth slowdown in the services sector. It's still growing, but the growth is actually slowing down. The slowest since December last year. That means close to about a 11-month low. So all in all, what I could see over here is that the Japan services could actually start to take a soft tumble at this point in time. That means, i.e., potentially due to external demand environment that is turning weak. That means we may start to see potentially less tourism, less tourists to visit Japan due to a bleak global environment, and also due to the fact of this geopolitical risk premium as well that is rising, unfortunately, from the Middle East region. So all that's could actually impact global consumer spending and global consumer sentiment, which does not bode well for the tourism sector in Japan, given the fact that the services PMI since the start of this year has been pretty much primarily driven by the tourism sector in Japan. And also what's interesting over here is that despite the fact that services stats went down below forecast and the growth started to decelerate to a 11-month low, but the Japanese yen didn't actually weaken as much as against the dollar. So in fact, the dollar Japanese yen right now is moving against the fundamental in shorter term perspective, because the fact that given services PMI data is weak, it will translate to BOJ having a much more less reluctant move to actually kickstart their normalization of their ultra low negative interest rate policy. So that should actually support further Japanese yen weakness against the dollar. But however, the dollar Japanese yen rate didn't actually rally this morning on the backdrop of this weak services PMI. That means, i.e., the Japanese dollar yen is now actually more moving in line with the broader base FX market. So later we take a look at the dollar yen FX technical, okay, to see where we are potentially levels to watch or heading on the dollar yen in the shorter term. Okay, now with that, what are the key economic data to look out for throughout the whole session of today? It means stretching from the European session up to the US session. So European session, today is actually flash PMI data releases across the globe. So in Europe, you start to see Germany, France, as well as the Eurozone releasing their manufacturing PMI and the services PMI flash data for October at 4 p.m. Singapore time today. So in the Eurozone, we are now still looking very bleak number on the manufacturing side, 43.4, way below around the same with previous 43.4 consensus. 48.7 as well for previous services data in the month of September. So in terms of the absolute level, it's almost similar as previous month of September, but however, it's still a very bleak outlook in terms of the Eurozone economy. That means, i.e., more or less the rising odds of what I call stagflation environment in Europe at this point in time, based on this PMI potential, we call it levels in Eurozone. Then over here, you see the UK one as well, releasing at 4:30 p.m. Singapore time later, both services and manufacturing PMI. Then coming to that will be US one. The US will release at 9:45 p.m., slightly 15 minutes after the start of the US session, for both the services as well as manufacturing flash PMI data. So what's interesting over here is that do concern about the services data, because for the services data has been pretty much resilient in the last few months. So this services, because you know that US is pretty much driven by the services sector. In terms of consensus forecast, they actually market participants actually expecting a contractionary mode in the services sector for US for October, dipping below 50 at 49.8 versus 50.1 in the month of September. All right, so then thereafter, it will be pretty much a quiet session. Then what comes early morning, 8:30 a.m. Singapore time, will be the release of inflationary data in Australia. So as you all know that last week, we start to see the release of the latest RBA minutes that's chaired by the new governor. The best RBA is the Australia Central Bank. We have a new governor that takes charge in the previous RBA monetary policy meeting. But however, last week release of that minutes of that meeting indicate that there is still some hawkish vibes among the RBA official, stating that the concern of elevated inflationary level in Australia. So therefore, they will be pretty much mindful about cutting rates as soon as possible. Do not forget, Australia has paused their policy rate for 4 consecutive meetings. Okay, so what's interesting over here is that even though this is Q3, the Q3 year-on-year inflation rate, market is expecting a dip down 5.3% versus 6% in Q2, but that is quarterly. So Q3 is July, August, September. But however, if you look at from the month-on-month basis change, the monthly indicator for September has started to tick up, market expecting to tick up to 5.4% versus 5.2% in the month of August. So if the expectation on the monthly CPI indicator came within expectation is actually telling us 2 consecutive months of growth. So if you look at the trend over here, okay, this is 5.2 in the month of August. Sorry, this services what I'm looking at. Yeah, this Australia, pardon me. Yeah, so previously it hit a kind of a drop at 4.9 in July, then August 5.2, and if September one came within expectation at 5.4, so it seems to me that it could be starts to form a bottoming, we call it a behavior in terms of the monthly basis. Okay, that means monthly is less lagging than quarterly. So that actually kind of support also that a hawkish vibe that is being what I call conveyed in the RBA minutes that's actually shown last week. Okay, so later we look at the Aussie dollar. So in fact, the Aussie dollar also kind of benefit to this potential rise in consensus. This is monthly CPI as well. Okay, so now with that, also do not forget over here is that in today's close of the US session, for those who are actually monitoring the US benchmark stock indices, especially the Nasdaq 100, Microsoft and Apple, these are the two of the mega 7 cap stocks that potentially could drive substantial movement in the S&P 500 and the Nasdaq 100 is Microsoft and Alphabet. They are actually releasing their earnings results after the close of the US session today. All right, so that's actually explain why the Nasdaq 100 outperformed yesterday due to this anticipation of Microsoft and Alphabet results that are expecting to actually be to be pretty much rosy as well. Okay, so with that, let's now take a look at the technical chart. So let's start with the FX market first. So FX market, I flashed earlier on. So this is the 5-day rolling performance. What we could see over here is that the dollar strength starts to weaken across the board. So if we stretch it for okay, so this is the rolling 1 month. Okay, so you go to the 5-day, pardon me, 5-day over here is also similar as well. Okay, the dollar actually weakened across the board. All right, so with that, right, now let's take a look at the technical outlook on the euro dollar first. Okay, let's switch on to the euro dollar. So euro dollar, yesterday we were neutral. So what we see over here is that the euro dollar broke above the upper neutrality limit in yesterday's US session at 1.0635. So I could see right now it actually validate our potential we call it bullish bias condition, at least in the short term for today. So given the fact that the RSI now is at the overbought level, no clear signs of a bearish divergence yet. So potentially we may start to see a pullback as well, because now it's also testing the 50-day moving average. So potential pullback level will be at 1.0635, around this level, yesterday's breakout level, which is the upper neutrality limit. So but I will not use this level as my key short-term pivotal support level for today. Put it slightly lower at 1.0595. So this is actually a very clear minor range turns into a pullback support. 1.0595 key short-term pivotal support level, potential pullback before a continuation of this short-term bullish bias condition to test the next resistance level at 1.0735 and 1.0760, which is the minor range high of 21st of September and this minor range top of 12th of September. But however, if we start to see an hourly close below 1.0595, then this bullish bias condition will be in jeopardy to see a retest at the 20-day moving average at 1.0560, with also the risk to retest last week 13th of October swing low and 6th of October swing low at 1.049. So all in all, flipping to a short-term bullish bias on the euro dollar as long as 1.059 key short-term pivotal support holds. All right, so that's pretty clear. Very similar to the sterling dollar as well, from a similar configuration. Clear bullish breakout above yesterday's upper neutrality limit at 122.25 level. Also broke above this medium-term descending channel resistance that was in place since the high of 14th of July, and as well as it also clear above the 20-day moving average. So I'll be using the 20-day moving average as a key short-term pivotal support for today. Hourly RSI hit the overbought level, no clear bearish divergence, so potential indicate to us a kind of pullback back to yesterday's breakout level at 1.2220. So as usual, I don't want to use 1.2220 as my key short-term pivotal support. I rather use slightly lower over here to prevent any whipsaw at 1.2170 as my key short-term pivotal support level to actually potentially for this short-term bullish bias condition to play out on the sterling dollar. First step to retest the swing high, the minor swing high area of 11 of October and 12 October at 123.30, followed by a potential further push up towards 1.2425, which is also the 50-day moving average, and as well as confluence with the 200-day moving average, and this minor we call it a range resistance from 15th of September to 21st of September. So however, if we start to see an hourly close, means a breakdown of the hourly close below 1.2170, then this short-term bullish bias condition will be validated to see a retest of last week's swing low area at 1.2110. Okay, so that's for the sterling dollar. So now moving on to the Aussie dollar. So you look at the Aussie dollar also did a very strong push right now, breaking above last Friday's swing high area, and as well as yesterday's we call it US session high as well in today's Asia session. So I will not be using this level as a key short-term pivotal support level because it's too tight. I will use yesterday's congestion area over here, now turns into a pullback support at 63.20, looking for a potential continuation of this short-term push-up to retest this congestion area here, which is the swing minor swing high of 18th of October, former minor range support of 12th of October and 10th of October, as well as the 50-day moving average, I think also at a resistance at around 63.95. So for the Aussie dollar, is more trading in a sideways range in the last 4 weeks or so. All right, so having this short-term bullish bias as long as 63.20 holds to actually allow the Aussie dollar potentially to hit the upper limit of the short-term range. But however, if we start to see an hourly close below 63.20, then we will start to see a dip down towards in first step the minor range support that is still keeping previous down move since 3rd of October, the start of this month at 62.90. Okay, that's for the short-term technical outlook for today on the Australia dollar. So now very quickly, let's look at the dollar yen. So dollar yen, right? Let us start with the longer term chart first. Look, you look at the daily chart of the dollar yen, for sure, the 20-day moving average is a key support level that is acting since the previous test on it on 24th of August, the rumored intervention on 3rd of October. Okay, but refusing to break above the 150.30 level mark. And what's interesting over here is that the RSI has started to turn downwards. So very obviously this RSI here has started to slope downwards. Okay, very clearly. So indicating to us, right, this bunch of momentum over here that is being kickstarted on the 1st of September, that means in the last 4 weeks or so, the upside momentum has been losing strength over here. So what we could see on the daily chart, this is the daily chart. If we go to the hourly chart over here, it's still supporting the 20-day moving average. So what I could see at this point in time, given the fact that this dollar yen itself is now clamped between two situations. Number one, we could potentially see some signs of policies intervention in terms of either vocal or real intervention upon hitting the 150.30 level mark, the risk zone, or as well as today's weakness in the services PMI data that is also supporting BOJ stance of keeping, or what you call it, pretty much reluctant to bring forward their normalization of their negative interest rate policy. That means it gives them a potential, what you call, a reason to do so. But however, if you look at just now the chart that I shared with you at the start of the presentation, today's presentation is the broad-based dollar weakness that is seen across the major pair from a 5-day rolling perspective and a 1-month rolling perspective. So all in all, there's still pretty mixed element for today for dollar yen, and given the fact that it's still holding above this 140 level, so I will still have that neutrality bias at 150.30, 140.90, but I do keep a lookout if we start to have an hourly close below 140.40 level, 149.40, pardon me, 149.40, which is the 20-day moving average, as well as this very clear graphical congestion, former congestion level breakout tested, now turns into the pullback support level, confluencing at the 20-day moving average. So if you have an hourly close below 149.40, then potentially, right, we could start to see a more pronounced short-term slight, at least in the first step, for the dollar yen to retest this minor range support area from 5th of October and 10th of October at 148.25 in first step. So that also confluence very closely with the 50-day moving average as well. Okay, so that's the outlook for the dollar yen. Yes, we still have a neutrality stance, but we do have a slight bearish bias on the dollar yen, given the fact of a broad-based dollar weakness that is seen across the board. Okay, so now FX market covered. Benchmark stock indices. Okay, benchmark stock indices, let us start with the Hong Kong 33. So Hong Kong 33 today it opened. Yesterday the market closed. So today the Hong Kong stock indices, the Hong Kong stock market opened. So Hong Kong 33, which is the Hang Seng Index. So let's take a look at this situation over here. Is for sure we now start to see a sell-off at the start at the Hong Kong stock market, the first hour during the opening of the Hong Kong stock market before it actually bounced, but the bounce actually refused to break above the previous swing low area of 4th of October, and 5th of October now turns into a pullback resistance. All right, so I'll be using and also there is no clear signs of a bullish divergence because you see over here price action trade lower, your RSI also lower as well. Okay, so there's no clear bullish divergence. So all in all, I'll be for sure this will be a key short-term pivotal resistance, pardon me, to watch for today, 17,135. So using 17,135 as a short-term pivotal resistance level, looking for a potential continuation of this weakness on the Hong Kong 33 to test the next support area at 16,800. But however, if we start to see a hourly close, a clearance with an hourly close above 17,135, then this short-term bearish bias condition will be invalidated to see a further push up or a counter trend rebound to test the next resistance level at 17,350. So that's for the Hong Kong 33. For the German 30 index, so for the German 30 index, yesterday we do have a counter trend bounce, but the counter trend bounce did actually come in and hit the exact resistance at 14,885. So what we could see over here is that the situation over here is rather mixed at this point in time. RSI in the middle of nowhere, so but it's still being kept below a resistance level graphically at this level here at 58 level. Okay, hasn't hit exactly it. That means indicate to us that it could still move up slightly. So okay, so in this situation over here, right, it's pretty dicey. So potentially, right, there could be still a bounce coming back towards very close towards this 14,885 level. But however, because price has already reacted quite significantly off from yesterday's low, so instead of playing this counter trend rebound, I will use potentially a further push up to flip back to a bearish bias condition on the German 30. So using for sure, this is a clear short-term support level at 14,990, and also the 50% retracement of the last push down. Okay, sorry, not 50%. Yeah, close to the 50% retracement. Okay, this is 38.2 for the 14,885. So instead of tightening at 14,885, I'll use 14,990 since it's tested more times, one time, two times. This only tested about one time. Yeah, so 14,990. Look for it to actually to fit any potential bounce and flip to a back to a short-term bearish bias on the German 30. Then looking for a retest at 14,620, followed by the next support level at 14,520 on the German 30 index. But however, if we start to see a hourly close above a clearance, hourly close above 14,990, then this counter trend rebound will start to be more pronounced to actually see a test at the 20-day moving average, acting as a resistance as well at 15,135 / 15,195. Okay, so lastly will be the US indices. So for the US indices, this Wall Street 30, the Dow Jones Industrial Average, actually reacted off this congestion zone here at 32,230 and hit down and start to trade sideways. So I'll be using this 32,230 close to yesterday's swing high area, and as well as if I do the Fibo retracement, okay, is at 38%, 38 point, yeah, 38.2%. Okay, so with that, right, I'll be using this level here as my key short-term pivotal resistance level, looking for a push down towards 32,830, which is the minor swing low of 4th of October and 6th of October. A breakdown potentially could see the next support coming in at 32,570. But however, if we start to see an hourly close above 32,230, then this short-term bearish bias condition will be invalidated to see a more pronounced counter trend rebound to retest the 20-day MA at 33,510. Okay, which also correspond to this clear congestion zone as well, clear congestion area as well. Okay, Nasdaq 100. So Nasdaq 100 over here, what we could see is that the price action reacted, the counter trend rebound reacted exactly close to the former major ascending trend line. Support from the December 2022 low now turns into a pullback resistance level. And so the RSI also managed to hit the former swing high of 16th October and reacted exactly off it. So I will be using slightly above this level here, the former congestion area of 14,825, which is very close to 20-day moving average as well as the 50% retracement of the last push down from 7th October to yesterday's intraday low, also conferencing at 14,825. So 14,825, slightly above yesterday's swing high area and the pullback resistance level. This will be my key short-term pivotal resistance. Flip to a bearish bias condition for today, looking for a test towards a breakdown below this minor support level at 14,620, potentially see a retest at this 14,450 swing low area. That means yesterday's swing low area, and that should be the short-term bearish bias condition for today. Then, however, if we start to see a clearance with an hourly close above 14,825, then the short-term bearish bias condition will be invalidated to see a squeeze up towards 15,000. Yeah, right, I say 15,000, which is the clear congestion area graphically, and as well as the 50-day moving average acting as a resistance. Okay, so very quickly now, key commodities market. Let's start with oil price first. So West Texas crude oil, yesterday it actually tumbled down, but managed to play around with the key pivotal support that will be highlighted at around 87.30/86.50 level. Okay, so this level over here, right, also corresponds with the 50-day moving average. So I will use a slight access at 86.50 level as my key short-term pivotal support for today. So still maintaining that short-term bullish bias, but however, it got to break above very quickly at 88.35, which is this area here. A break above 88.35 potentially could see a retest at that last Friday swing high area at 91 psychological level. That's for the West Texas crude oil. But however, if we start to see a breakdown below 86.50, then this slight corrective decline will be much more pronounced to retest 85.30 and even last Monday gap up at support level at 83.20. Okay, 2 weeks ago gap up, probably not last Monday. So now for gold, very quickly, gold price over here is yesterday we do have a short-term bearish bias condition. So gold actually kind of a traded sideways after yesterday's intra-day low during the Asia session at 19,068 level, and it trades sideways. So we're still maintaining that short-term bearish bias to see a potential retracement of this first leg of short-term uptrend for gold from 6th of October up to last Friday's high. So potentially we could still be in a retracement mode. So as long as 2006 short-term pivotal resistance is not surpassed right now, for today I have a downside trigger level, which is this of Wednesday swing high, that actually last Wednesday swing high that confluenced very closely to yesterday's low at 1962, and as well as this lower boundary of this minor ascending channel. So a breakdown below 1962 reinforced that retracement scenario, that downside retracement scenario to at least test the support level at 1932/1920, which is also the 200-day moving average. However, if we start to see an hourly close above 2006, then this bullish impulsive move shall potentially continue to test the next resistance level in first step at 2020, 37. All right, so now we have reached exactly at the 30-minute mark for today. So that's the key highlights that I have for today daily dose of market insights. So I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.